Hello everyone, today's video is all about national insurance. So NI doesn't get a lot of airtime, but very important because you could be paying too much national insurance. And I will tell you why that is and what you can do about it. But first of all, a recap on the different types of national insurance. First of all, Class 1s, which I think most people are generally familiar with. Class 1 is the national insurance that employees pay on their earnings, and employers pay that on the employee's earnings as well, but the rates are different between the employee and the employer. So an employee would pay 12% of their earnings between £183 and £962 a week. That is Class 1 national insurance. We're talking about the current tax year, the 2021 tax year. But there's also this extra additional amount that you pay on earnings above £962 a week. You pay 2%. So that's an uncapped extra amount. For the employer, they pay 13.8% of the employee's salary over £169 a week. So only when the employee starts paying £169 does the employer start paying employers' NI. So the rates are different, and these rates change every year. So the employee's NI kicks in that they start paying at 183, but for the employer it's 169, and sometimes those rates are aligned, other times they go out of kilter, and these change every year based on the government mathematicians telling them how to tweak various not various rates, because that's important, because the Chancellor and the Tory government are locked in, the triple lock of the VAT, national insurance and the income tax. They've said they're not going to increase the headline rates. So whilst they may not increase the national insurance beyond 12% plus the 2%, they may increase or decrease the point at which it kicks in. Technically, that's not increasing the rate, but it can make a hell of a difference to the national intake of NIC to the tune of many millions just by altering the start level or indeed the end level. So anyway, employers pay the secondary Class 1s. Now, what about Class 1A? So Class 1A is paid solely by employers, and it is on the likes of employees' benefits. So company cars, health insurance, anything that goes on a P11D for an employee, the employer will pay Class 1A national insurance, 13.8%, and that is paid normally once a year, every July, unless they've now opted for this new system of payrolling the benefits, where you can avoid the P11D and just make good the Class 1A as you go. So the next one, Class 2s. Class 2s are for the self-employed. So Class 2s, you only start paying Class 2s if you have self-employed profits above £6,475 a year. If you are a sole trader or a partner and you're not making those profits, then you don't pay Class 2s. But if you are, you pay a flat rate, not a percentage of that or anything above it. If you earn that in profits, if you have that in profits, 6,475, then you start paying Class 2s. And Class 2s are a flat rate, a fixed flat rate, £3.05 a week. And they are collected via the tax return. For many years, for decades, they weren't collected via the tax return. They were collected by a standing order every month or every quarter by HMRC. You'd pay over this £3 a week, or lower it was a few years ago. But HMRC said, finally, from an admin point of view, that is a bit ridiculous. Let's just collect all this through the annual tax return, which obviously the self-employed would do every year anyway. So also the self-employed have to think about Class 4 national insurance. So Class 4, again, you look at a profit level before it kicks in, before you have to worry about it. And the profit level is higher than for Class 2s. It's $9,500 in this current tax year. So if you're making profits in excess of $9,500, you have to pay Class 4. And Class 4, unlike Class 2, is not a flat fixed rate. It's a percentage of your profits in excess of $9,500. Specifically, anything that you make that you have profit-wise in your business between $9,500 and $50,000, you pay 9% national insurance, Class 4, and any profits you make in excess of $50,000, 2% on that on that excess is class 4. So it's a bit like the class 1, where they've got this little couple of percent in excess of a headline rate. So 9% and 2%, and that is what the self-employed pay. So most self-employed people, I would suggest, pay both class 2 and class 4 because their profits are more than $6,500 a year. So what about what else is that? Class 3. Class 3 is the voluntary national insurance if you have a gap in your contribution history. So to get the full state pension for when you retire from the government, to get the full state pension in the UK, you need 35 qualifying years. So qualifying years with national insurance contribution record, whether it be a combination of 1s, 2s, 3s or 4s, which we'll come on to in a moment, but basically 35 years. But if you've been living abroad, say you had a career break or living overseas, you could have gaps. So thankfully you can go onto your personal tax account with HMRC, have a look at your national insurance history and see if you have any shortfalls. Could be that you're planning on retiring or taking your state pension next year and you've only got 33 qualifying years for whatever reason. So what do you do with the shortfall? Well, you can buy extra years from HMRC. You will pay what's known as Class 3 national insurance to top up your the gaps in your years for your national insurance. But that's quite expensive. It's £15.30 a week for every week that you are missing. But you've got to crunch the numbers, and if it means paying, this which can run into hundreds, maybe a couple of thousand over a few years, but if that's going to result in you getting the full state pension in your hopefully happy and long retirement, then it's worth paying, even though on the face of it seems expensive to pay these voluntary top-ups. Of course, if you're a lot younger and you have a gap in your contribution history, and you got to look forward and think, well, actually, even though I spent a few years living abroad, I still think I'm going to do 35 years of qualifying between the ages of 16 and 67 or whatever the state pension will be when you retire. So it's not an issue. So it's not an issue if you have gaps halfway through your career, halfway through your life. You can still get the qualifying max 35, or it may be that you do have to pay some voluntary class 3s. Now, in the old days, why is this a problem, all this national insurance? In the old days, historically, people were either self-employed or they were employees. And they were employees for one firm at a time, and it was easy to work out the national insurance. Class 1s, if you're an employee, move to another job, a few years, still it's class 1, self-employed, class 2 and class 4. Or maybe the employees decided they're going to quit the job and become self-employed. Well, that's okay, it's fine. So again, you've got a straight edge. You stop paying class 1s, you start paying class 2s and class 4s. Now, fast forward to where we are today in the whole gig economy, things are different. The working patterns of people are so different to what they used to be that simultaneously you can have people right now who are in both employed positions and self-employed positions. So they've got a paid job and they've got some self-employed work. You could have individuals who have multiple employed works. So they've not just got one job, they've got several jobs. So the point is that the individuals who are in this situation, and it applies to millions of people now, not just thousands, millions of people are in this position where they have more than one of these types of engagements going on at the same time, both self-employed and employed, or multiple self-employed or multiple employed. So from a national insurance point of view, the contributions, they could be contributing class 1s, class 2s, class 4s, because we know that 1s are for employees, 2s and 4s are for self-employed. If you're both, potentially you're paying all the national insurances, 1, 2 and 4, and probably not even thinking twice about it. However, there is a rule that says there's a maximum that you do not need to exceed a certain amount if you are paying class 1s, multiple class 1s, and also class 1s and 2s and 4s. So you need to think about this. Are you right now a employee and you're self-employed? If so, chances are you're paying 1s, 2s and 4s. However, you could be paying too much, because there is a rule that says if you're in that situation, there's a cap on the total of the 1s, 2s and 4s, and it's quite a convoluted formula. You need to get in touch with me to find out more, to see if you're in that situation. But there is a maximum, and I don't think many people know about it. So don't pay more than you need to if you're self-employed and you are an employee. Now, what if you're an employee with multiple jobs? So a lot of particularly in the gig economy now, a lot of these big providers are saying to the staff, actually, we'll put you on the payroll now. We used to be self-employed a few years ago, so they're back on as employees, and they could have several of these gigs, so multiple employments. Now again, there's a rule that says for class 1s, because if you're an employee only, even though you've got multiple employments, you're only concerned with class 1, not 2s and 4s. But there's another rule that says there's a maximum for class 1s. If you've got more than one job, you could be paying too much class 1 national insurance. And again, it's quite a convoluted formula that you need to work out, but you could be overpaying hundreds or thousands of pounds in national insurance that you didn't know about, because you're just getting a wage slip from these different employments and they're deducting national insurance and the pay as you earn, and you're none the wiser. But I'm telling you now, there is a maximum across all your employments for national insurance, class 1s, and you could be paying far too much. So do think about that. Do get in touch with me if you want to see if you're in that situation, because many people are and they don't know about it. So it applies to people who are both employees and self-employed, so they're paying class 1, class 2 and class 4, and it applies to people in multiple employment positions who are paying class 1, class 1, class 1, multiple class 1s, but there is a maximum. So do consider it, do get in touch, and we'll have a look and see if you are paying too much national insurance. So that was an overview of the national insurance maxima, if you will. I don't want to go through the formula in terms of working it out. It's very complicated on this video, but there is a prescriptive ruling that on HMRC that they say, look, this is how we would work this out. But chances are that the employer, because if you think about it, each employer that you have, they're not going to know the details of your other employments, and all they have to go on from HMRC is a tax code to deduct the right amount of pay as you earn. So hopefully the tax code that you've got, even if you've got multiple employments, will get it right in terms of the income tax, but it's the national insurance that is hardly ever spot on if you've got multiple employments. That's the one where you really need to think of. And indeed the income tax as well. That's why it makes sense to do a tax return, so that it all comes out in the wash at the year end. You know exactly where you are, even with multiple employments. And if there's technically no obligation to do a tax return, I would suggest you do one anyway to see where you are from an income tax point of view, but then also have a look at this national insurance situation, because you could be pleasantly surprised. Well, first of all, you'll be angry that you pay too much, but then pleasantly surprised that you could get a decent refund from HMRC. So do think about that if you are in that situation like millions are, where you're doing multiple jobs or both employee and self-employed. So if you like this video, please do subscribe there, and I will see you soon.